Well, hello and welcome to the channel. First post on here, I wanted to make a very simple video about a very simple trading method. Something that every trader should be on top of, and that is basically trading the trend. It is the most important thing. It's the first thing you should learn. Everything else is useless without it. You can trade Elliott wave theory, Wyckoff method, TD sequential, cycles, you name it. Moving averages. Doesn't matter. What matters is the trend. And the trend is determined by higher highs, higher lows, or lower lows and lower highs. That gives you your direction. And that's how the market speaks to you. The market is speaking to you. You just have to listen. You have to understand the language of the market. So what I would like to bring to your attention is the line chart. The line chart is important to pay attention to because it gives you the closing price, and that is how I determine trend. You can use trend lines to determine trend. That works as well. But for me, there's no arguing whether or not the price closed a lower low or closed a higher high. You can't argue that. Whereas a trend line, you can move a trend line to fit your bias. You could fit a parabola the way you want it to fit. Whereas the closing price is the closing price, and there's no arguing it. So on this daily chart, what you can denote from it is a series of higher highs and higher lows. Let me just take a screenshot and we will dig into it. So after a series of lower lows and lower highs in 2022, you had a higher high. And then you had a series of higher highs, higher lows, higher high, higher low, higher high. And there was your trend. Until we wanted to backtest this area. And then from there, you came back and closed a higher high after closing a lower low. You closed a lower low, then closed a higher high. After that, resumption of the uptrend, higher high, until right here. You closed a lower low, you got yourself a lower high. Until right here, closed a higher high, then you got a higher low. And there's your higher low, ever so slightly. And since then, you have closed from right here, a higher high, higher low, higher high, higher low, higher high, higher low, and so on and so forth, until here. There, the way that I look at the market is you are at risk. After closing a lower low, you're at risk of putting in a lower high right there. So that would have been a valid sell setup. Invalidation is getting back above the previous high. And we did invalidate. Closed a higher high, higher low, higher high, higher low, higher high, higher low, higher high, until right here was your swing low. Closed a lower low, you got a lower high. Lower low, lower high, lower low. And it remained that way until today. Today, you have a breakout and a potential change in behavior right there. With today's candle close, you have a potential higher high. That is a potential change in behavior. I wouldn't call it confirmed until you make a higher low. Then you can have a higher high, higher low, higher high, higher low, and resumption of the uptrend. On a weekly scale, you can see that there is a potential or a change in behavior here. With this weekly close, you had a higher high, but you had a lower low close right there. With that happening, you're at risk of closing a lower high. The way to invalidate that lower high is to close above 69,400 on a weekly close. Then you get yourself a higher high. Then buy the higher low and expect resumption of the uptrend. Invalidation becomes underneath the previous weekly swing low. And until that happens, you're at risk of setting in a series of lower lows, lower highs. So you've got plenty of time. If there is more uptrend to be had here, no need to rush into anything. Don't need to FOMO in. Just keep it stupid simple. The KISS method of trading. Keep it stupid simple. Trade with the trend. Trend is your friend. We can get down to maybe a 4-hour chart. And on the 4-hour chart, you can see where the candles are and where the liquidity is. You can see we just took all this liquidity here. We do have a series of higher highs and higher lows on a 4-hour, and that would be invalidated with a close below 60,000. But you have to pay attention to where the liquidity is. There's a little bit of liquidity up here, and there's liquidity up here that still hasn't been taken. And we have liquidity down here at previous supports. I would expect all of those areas to eventually be taken. And we'll see where price closes out to determine the trend. And this works on all time frames. Depends on the time frame you're trading. Some people will trade a weekly chart. Some people will trade a daily. Some people the 4-hour. Some people will trade the 5-minute chart. It's all the same. The trend is your friend until the end. 5-minute chart's a lot faster than a daily chart. It all depends on how long you want to stay in the market for. But where do I see opportunity? As a trader, I see opportunity up here in that liquidity zone and down here in this liquidity zone. These liquidities were taken out with that wick low, so that being a potential swing failure pattern, I would look to buy previous support, expecting it to act as support again, especially if it's closing higher highs and higher lows. That would be a bonus. And then I would target upper liquidity being up here. If price moves up here before taking this liquidity, I would expect this to push down and grab that liquidity thereafter. And that actually matches with the chart pattern that I'm kind of following, as this being an ABC. Well, let me change the color so I can match the legs for you. This being some kind of weird pattern there, but it kind of matches something like that, and terminate the pattern with one more sweep down into that liquidity, or lower. This can go take the lows again. Might as well. If there's liquidity there and there's willing sellers, the market will let you sell as long as you want to sell. And that might complete this entire correction. It may take another leg down, a sweep of this liquidity or even this liquidity before it's all said and done. But yeah, as far as trading the range, trading the trend, we've been in a range for 2 months now. There were trades to be had in both directions. There's moves every day. Just have your invalidation, have your stop loss at your invalidation, and pay attention to trend. The higher highs, higher lows, the market's telling you something. The lower lows, lower highs, the market is telling you something. It's up to you to listen to it.